Welcome to today's deep dive. You ready to get into the mind of Warren Buffett?
I am. Always fascinated by what we can learn from him.
Yeah, he's kind of a legend, right? One of the most successful investors, business leaders.
Oh, yeah.
Like ever. So today we're going to unpack what makes him tick, his approach to business, investing, even how he manages people.
It's a whole philosophy, really.
Yeah, it's like if we had the chance to sit down with the Oracle of Omaha himself, what would we ask?
Exactly. What are those core principles? What can we apply to our own lives?
Well, luckily we have someone here who's dug into Buffett's world and can help us decipher all this wisdom.
Happy to be here. It's amazing how much there is to learn from all these books and articles.
Yeah, you sent me a ton of material, and one theme came through loud and clear. Buffett is obsessed with this idea of finding the right business to invest in.
Oh, absolutely.
But that can't just mean any company with a good idea, right?
Right. For Buffett, the idea is just the starting point. He's looking much deeper at the fundamental economics of the business.
So it's like he's not chasing those flashy startups that are all over the news.
Not at all. He wants companies that are built for the long haul, companies with a structure that almost guarantees their success.
Okay, I get that. But how do you even find a company like that? What are the signs?
Well, one key element for Buffett is finding businesses that don't require huge amounts of cash reinvestment compared to their earnings.
So it's like he wants companies that are making a lot of profit without having to constantly pour money back in just to stay afloat.
Precisely. He wants to see a high return on invested capital. That's a key metric for him. And that's what's so fascinating about how he thinks. It's not just about how much money a company makes, it's about how much it gets to keep.
Makes sense. So You're saying there's a difference between making money and actually generating what? Free cash flow?
Exactly. Free cash flow is the lifeblood of a business. And Buffett wants companies that are gushing with it.
You know, that reminds me of an example from one of the articles you sent, the comparison between Coca-Cola and General Motors.
Oh, classic example.
Both huge companies, but their financials tell very different stories.
Oh, completely different.
So tell me, what's the difference?
Well, think about Coca-Cola's business model. They don't have to reinvent their product every year. Their brand, their formula, it's basically timeless.
Yeah, like they've got that secret formula locked up in a vault somewhere.
Right. So they generate tons of cash that can either be reinvested or returned to shareholders as dividends.
Okay. And General Motors, I mean, they used to be a pretty solid company, right?
They were. But look at how their business works. They have to pour money into new designs, new factories, just to keep up with the competition. Every year, there's something new.
So even if they're making a decent profit, a big chunk of it goes right back into the business.
Right. And what's interesting, the article even mentioned that back when GM was making a pretty decent profit per share, they were still taking on tons of debt and issuing more stock just to fund their operations.
That doesn't sound very sustainable.
Not in the long run. And it dilutes the value for existing shareholders.
Okay, so this minimal capital investment idea, I'm starting to see how it's so central to Buffett's approach. It's not just about making money, it's about making money efficiently.
Exactly. It's about the underlying structure of the business. Some companies are just built to be cash machines.
And that brings us to a question for you, the listener. Think about your own field, your own industry.
Yeah, take a moment.
What companies seem to have this kind of like this built-in advantage?
Who's generating high profits, but not constantly needing to reinvest everything just to keep the lights on?
Because those might be the companies that catch Buffett's eye. All right, so we've talked about picking the right business.
Right.
But there's another equally important piece of Buffett's strategy, and that's finding the right manager.
Couldn't agree more. And it's actually pretty remarkable when you think about it. Buffett has led Berkshire Hathaway for over 5 decades.
That's crazy. I mean, that in itself says something.
Definitely. This isn't just about being a smart investor. It's about being a master of management, building a company that can thrive over the long term.
And from what I gathered from the material you sent, he has these sort of management sutras he lives by, right? Almost like a set of guiding principles.
Oh, absolutely. And they've created a very unique culture at Berkshire Hathaway, a culture built on trust, autonomy, and long-term thinking.
You know, there's this great story in one of the articles about a company called R.C. Willey, a furniture business.
Oh, yes. Fascinating case.
And it really highlights how much emphasis Buffett puts on finding the right person to run things.
Right, the right person at the helm.
So R.C. Willey, they were this hugely successful furniture retailer in Utah.
They were. Huge operation.
But they had this kind of unusual policy They never opened on Sundays.
Right. Never.
Which, seems a little odd for a retail business. Was that just like a personal preference for the owner?
It was more than just personal. It was deeply rooted in the owner's, Bill Child's, Mormon faith. For him, closing on Sundays was non-negotiable.
I can only imagine that raising a few eyebrows in a deal with Warren Buffett, right? I mean, Sunday's prime time for retail.
You would think so, wouldn't you? But this is where it gets interesting. Child was so confident in his business model and so committed to his principles that he actually offered to finance the construction of a new store in Boise, Idaho, entirely with his own money.
Wow.
Yeah. And he told Buffett that if the Boise store wasn't successful, Berkshire Hathaway could just walk away. No payment needed.
Whoa. Talk about putting your money where your mouth is. What happened? Did it work?
The store was a massive success. Child turned the property over to Berkshire, and he even refused to accept any interest on the money he tied up for those 2 years.
That's incredible.
It is. And it really speaks to his character, his integrity.
Yeah. So the story, it kind of shows the human side of Buffett's approach, right?
Oh, absolutely.
It's not just about crunching numbers and looking at spreadsheets. It's about finding individuals who are passionate about their work, who have deep conviction.
It's about more than just skills or experience. It's about those intrinsic qualities that you can't teach, that drive, that almost obsession with doing things well, serving the customer.
I think that's what he meant when he talked about finding people who tap dance their way to work, right?
Exactly. They genuinely love what they do.
So let's shift gears a bit and really delve deeper into those qualities that make someone the right manager in Buffett's eyes.
Right.
We've got this great example with Bill Child, but what else is he looking for? What else makes someone stand out?
This is where we go beyond just looking at financials and start getting into, human psychology, motivation, leadership. What really makes those great leaders tick?
So, what sets apart the good managers from the exceptional ones? What's that extra something?
Well, passion is a big one. Do they truly love what they do? Are they excited to get to work every day?
That makes sense. Buffett himself always emphasizes choosing a job you're passionate about, right?
Absolutely. He's got that great quote about, saving up sex for your old age, to emphasize that point.
Yeah, definitely a memorable way to put it. But it does highlight the idea that you shouldn't be stuck in a job you hate. Life's too short.
Exactly.
Yeah.
And it's not just about personal satisfaction either. Passionate leaders, they inspire the people around them, their teams, their customers.
Oh, that reminds me of an example from the material you sent. Stanford Lipsey, who was the publisher of the Buffalo News for decades.
Oh, yeah. Stanford Lipsey.
He was so successful, could have retired comfortably at any point, but he stayed with that paper for, I think it was over 30 years.
He did. Something like that.
And why? Because he just loved what he did. He was passionate about it.
And that shines through, doesn't it?
It does. And then there's the story of Irvin Blumkin, who ran Nebraska Furniture Mart.
Oh, Mr. B.
Yeah, started working in the family business when he was just a kid, right?
Oh,
Alongside his grandmother, the legendary Mrs. B.
that's right.
And they both had this incredible work ethic, almost like this obsessive focus on serving their customer.
Because in their blood.
It's amazing that even after Buffett bought a majority stake in Nebraska Furniture Mart back in the 80s, the Blumkin family is still running it today.
That's right.
Their dedication, it just speaks volumes about their belief in that business.
And that's another key thing that Buffett looks for. Genuine belief in the product or service you're offering. He gets that the best salespeople, the best managers, are the ones who truly believe in what they're selling.
Okay, so you've got passion, belief. What else is on this Buffett manager checklist?
Long-term vision. Can't forget about that. Buffett, he's all about the long game, right? Not interested in quick wins or short-term profits.
He's looking for that sustainable strategy, something that's going to last, which can be tough to find in today's world, right? There's so much pressure to meet those quarterly earnings targets, show immediate results.
It's true. It takes a special kind of leader to resist that pressure and stay focused on building something that's going to endure.
So how does Buffett find those leaders? The ones who can kind of block out all that noise and stick to their vision?
They have to have that conviction, that deep belief in what they're doing. And they need to be able to inspire that long-term thinking in their teams. But what's interesting? One of the most surprising things I learned from all this research was Buffett's admiration for Dale Carnegie.
Dale Carnegie, the how to win friends and influence people guy. That's unexpected. You wouldn't immediately think of a master investor being into that kind of self-help human relations stuff.
I know, it seems a little counterintuitive.
Yeah.
But It actually makes perfect sense when you think about it from Buffett's perspective.
Okay, help me connect the dots here. How does Dale Carnegie fit into the picture?
Because at its core, business is all about people.
Right.
It's about relationships, communication, understanding what motivates others. And that's what Carnegie was all about.
Okay, I'm starting to see it now. But how did this interest in Carnegie's work, how did it actually play out in Buffett's business dealings?
Well, we see it in the story of Beryl Raff, whom Buffett hired to run Helzberg Diamonds. And her first encounter with him is a great example.
Oh, yeah, what happened?
He personally picked her up from the airport, took her to his favorite lunch spot, made a conscious effort to put her at ease.
So he wasn't trying to intimidate her with his reputation or all his success.
Not at all. He wanted to create a genuine connection, see who she was as a person.
That's a great example of how he uses those personal interactions to build relationships and really assess character.
Exactly. He's not interested in playing power games. He wants to understand people's strengths, their motivations, what makes them tick. And there's this other great anecdote in the material about Charles Schwab, the steel tycoon.
Okay, Charles Schwab, what did he do?
He was a big believer in the power of positive reinforcement, focused on highlighting what his employees were doing well instead of dwelling on their mistakes.
So instead of criticizing, he was praising.
Exactly. He knew that people respond so much better to encouragement, to recognition, and Buffett clearly took that lesson to heart.
Yeah, he's famous for writing those handwritten thank you notes to his managers, recognizing their accomplishments.
A simple gesture, but it goes a long way in building loyalty and motivation.
All right, so we've covered a lot of ground here. We've talked about the right business, the right manager, the surprising influence of Dale Carnegie.
It's all connected, isn't it?
It is. But there's another critical aspect of Buffett's world we need to talk about: risk.
Ah, yes, risk. Can't forget about that.
It's unavoidable in any business, right?
Yeah.
But Buffett, he has a very particular approach to navigating it.
Oh, he does. He's incredibly cautious when it comes to debt, or as he calls it, leverage. He often compares using too much debt to gambling. It can multiply your gains, but it can also completely wipe you out.
Yeah, it's like playing with fire. You better know how to put it out.
Exactly. And the subprime mortgage crisis is a perfect example of how even something that seems like a good idea can turn disastrous when taken too far.
Right. All those lenders offering mortgages to people who couldn't afford them, packaging them up into those complex securities, selling them off.
A house of cards, really. Just waiting to collapse.
And collapse it did. And the story of Lehman Brothers, it's a stark reminder that even those huge established companies, they can fall victim to taking on too much risk.
Oh, absolutely. Lehman Brothers, they were heavily involved in underwriting those mortgage-backed securities. And when the market crashed, they were left holding all these toxic assets.
It was a domino effect, really. One bad decision leading to another.
Fueled by greed and a lack of, proper risk management.
And it ultimately impacted the entire financial system. So stepping back a bit, what are the lessons here for us as listeners? What can we learn from Buffett's cautious approach to risk?
Well, I think a key takeaway is the importance of understanding the downside. Before you make any major decision, ask yourself, what's the absolute worst that could happen?
And be prepared to handle it, right?
Exactly. It's about being prudent, not reckless. Sometimes slow and steady wins the race.
I like that. Slow and steady. But of course, you also need to be able to make decisions, right? You can't just be paralyzed by fear.
Right. You need to be calculated, informed. And that's another area where Buffett excels. Cost management. He's incredibly disciplined when it comes to controlling expenses.
Yeah, there's that quote from him where he says, "A manager who's not watchful about costs will be undisciplined in more significant matters as well."
It's about paying attention to the details, being a responsible steward of resources. And that applies to everyone, not just big companies.
So being mindful of those small expenses can actually translate to better decision-making overall.
It can. It's about developing those good habits, that discipline.
Okay, so we've seen how Buffett is this savvy investor, this master of cost control, this incredibly cautious risk taker, but he's also known for being really good with people, right?
Yeah.
How does he motivate his teams? How does he get the best out of them?
Well, it's definitely not about barking orders or micromanaging. It's about creating a culture of trust, respect, and empowerment.
So he trusts his people to make decisions, take ownership of their work.
He does. He gives them the space to thrive. He often tells his managers, it's your company, you run it.
That reminds me of the story about the advice he gave to Bono, the lead singer of U2.
Yeah, Bono. What was that about?
He was trying to raise awareness and funds for poverty in Africa, but he was having trouble getting people to donate.
I remember that. He was really struggling.
Yeah. And his initial approach was to kind of appeal to people's conscience, make them feel guilty about not doing enough.
The guilt trip.
But it wasn't really working. People don't respond well to that, do they?
Not usually. Guilt is not a very effective motivator.
And so Buffett, he gave Bono this really interesting piece of advice. He said, don't appeal to America's conscience, appeal to its greatness.
Ooh, I like that.
Right. Instead of focusing on the negative, focus on the positive. Focus on what people are capable of achieving.
And how did Bono react to that?
He actually took it to heart. Shifted his message to focus on America's history of compassion, its ability to tackle these big challenges.
And did it work?
It did. Donations went up significantly. It's a great example of how framing your message in the right way can make a huge difference.
A shift in perspective. Amazing what that can do.
It really is. And it also shows that Buffett's wisdom, it goes beyond just business and investing. He has this deep understanding of human psychology, how to connect with people on an emotional level. And it's not just about understanding people. There's something else, something fundamental to Buffett's approach that we haven't talked about yet.
You're talking about integrity.
Yeah, integrity. It seems to be at the core of everything he does.
It's absolutely central to his whole philosophy.
Yeah.
He's always emphasized that, hasn't he?
Oh, yeah. He's famous for saying he looks for 3 things in a manager: intelligence, energy, and integrity.
And if they don't have integrity,
the other 2 will kill you.
Exactly.
Yeah.
Powerful statement, isn't it?
It is. Shows how seriously he takes it. And it's not just lip service either. I mean, it reminds me of the whole Salomon Brothers situation.
Oh, yeah. Salomon. What a mess that was.
For those who don't know, Salomon Brothers was this investment bank that got caught up in a huge treasury bond trading scandal.
Back in the early 90s, right?
Yeah. And it could have brought the whole firm down. But Buffett stepped in as interim CEO, and the first thing he did was lay down the law about ethical conduct.
Zero tolerance.
He basically told the employees, lose money for the firm and I'll be understanding. Lose a shred of reputation for the firm and I will be ruthless.
Classic Buffett. He doesn't mess around when it comes to integrity.
And it's not just about demanding it from others either. He's also very open about admitting his own mistakes.
Oh, yeah. He's not afraid to say, hey, I messed up.
Like in one of the articles, he talks about his investment in Berkshire Hathaway itself, which, back then was the textile manufacturer.
Right, before it became the conglomerate it is today.
And he admits that he held on to that investment for way too long, even though the textile industry was clearly in decline.
He fell into that trap of the sunk cost fallacy, right?
Yeah.
Where you just keep throwing good money after bad because you've already invested so much.
And it ended up costing him a lot of money. But what's important is that he owns up to it.
He does. He's honest about his mistakes.
It shows that even the best investors, they're human. They make mistakes.
They do, but they learn from them. And that's a key part of the process, isn't it?
It is. So as we wrap up our deep dive into Warren Buffett's world, what's the one big takeaway you want our listener to remember?
That's a tough one. But I think it boils down to this. Buffett's approach, it's not about chasing quick wins or following the latest fads. It's about building something that lasts. Something that can weather the storms.
It's about choosing the right businesses, the right people, sticking to your principles, making tough decisions.
It's about thinking like an owner, not a speculator, and knowing that integrity matters more than anything.
It really does. It's about doing things the right way, for the right reasons, with the right people. And who knows, maybe if you follow those principles, you might just find yourself tap dancing your way to work. Thanks for joining us on this deep dive. We'll see you next time.